So for securitized tokens, optimal use cases.
So we've really seen two use cases. So I'll first start off by saying, when we looked at use cases, we really tried to look at those use cases that were fairly aligned with traditional finance. We really didn't try and go and do a laser light show out anywhere. And I do think there are some really exciting use cases that are on the fringes of traditional finance that will probably come more into the mainstream at a later date. But for now, we're really focused on those use cases that are sort of in the wild today and that are really beneficial at reducing friction or enabling capital formation. So I'll talk about the two that we've seen and that we work with today. The first is really in Regulation A raises, so capital raises, and then allowing investors to monetize those. So if you think about Regulation A, it's great. You can raise up to 75 million soon, which is fantastic. You can raise up to 50 million today. And so that allows a company to raise significant capital, 50 million, 75 million is fairly significant, from the general public. So it's a public offering, but within the confines of a private company. It's an interesting product, right? And the interesting component to that is while a company can raise up to 75 million, a lot of these companies are raising 15, 20 million from thousands of people. The only way that you can really raise capital from thousands of people and manage that cap table or manage those communications, think about mailing out prospectuses or, having cards you need to send out to your cap table. That would be very unruly and unmanageable unless you had a blockchain type model. So that's a very cost-effective way to raise funds within the confines of Regulation A. And we work with a lot of Regulation A companies, and they also come onto our ATS, both in the primary sense, helping them raise the funds, and then on the secondary sense, coming onto the ATS because they really want to offer their investors the ability to monetize. So if you think about it from an investor standpoint, why would an issuer want to offer this to their investors? It's because, one, they can say, you don't have to lock up your money until I go public or until I have an M&A event. And hopefully that lessens any pressure to do those things too early. So that leads to my second use case, which is fractionalized real assets. So if you think about fractionalized real assets, think about Bob Dylan's song catalog, which is sold for 300 million. If you think about, they could probably have fetched a much larger price if they would have gone out to the public and offered even a slice of that to fans. A lot of fans I know would probably have paid a lot of money to get a piece of Bob Dylan's catalog and royalties associated with that. That's a really great use case in terms of taking an asset, a real asset, and wrapping it and then selling it to the public. And even the institutional players can participate in this because if you had purchased that catalog, you could sell then part of that catalog to the public and offset your risk associated with it or offset the cost associated with it. Because I'm sure you could make money off the bat by just turning around and taking a slice of that catalog and selling it out to the public.
And there's clearly a lot of demand recently for fractionalization and digital art, which is also on the rise. We also talked a little bit about the efficiencies you guys are experiencing for AML, KYC. Do you want to expand a little bit on that?
Absolutely. So two really great areas that we're seeing a lot of efficiency is one on the AML KYC, and so anti-money laundering and know your client, being able to manage that and manage those users that are coming in a really secure way. And then two, cap table management. So being able to both manage and maintain the holdings. So corporate actions. Corporate actions, every single error I ever had to deal with on a trading desk, 90% of them were due to corporate actions that had come and gone and no one had been notified. The wrong person had been notified. And, little did we know we had some massive corporate action on our hands. You find out about 3 days later. So all of these areas are much more tightly integrated and managed with a lot less friction than currently exists in the system today.
Yeah, no, corporate actions is big. I remember when I was at Lehman, I was generally shielded from corporate actions. But I remember a few times when I got involved, I was just like, oh my God, this is a mess. So what are the use cases that maybe the use case is strong, but the liquidity isn't there yet? Like, meaning it's something like a particular sector or a particular asset class do you think needs more development, but it's just not there in terms of liquidity?
Well, with all of these, especially in the private markets, in general, there's not a ton of liquidity just because by the mere fact of them being private assets and having a market cap of, 10, 20, $50 million back from our days, if we would have seen something with a market cap of $50 million, we would have said, well, that's not even a nano cap, right? It's too small to be able to do anything with. I do think this is going to develop when we think about from a mindset perspective, this is really like taking everything that you have on an album and digitizing your music catalog, right? And then you can create all these really interesting playlists or photos, right? I had stacks and stacks of photos and then I had them digitized and now I can create all kinds of interesting albums and send out. Before you take these securities, before they're digitized, they're just sort of these monoliths. And yes, you can structure transactions and you can get cute and you can do all kinds of interesting things in finance. But in general, that is reserved for the institutional use case. To bring it down to the retail level by introducing digital securities, what you can do is you can start building blocks. I really see this as phases where, what we're doing now is we're just introducing issuers to this platform, right? And bringing digital securities, individual digital securities on, building the network. The next stage is bringing in all kinds of tools. So registered investment advisors, individual investors can start using these tools to slice and dice and make their own portfolios that are really mass customizable. And that's a use case I see, which is very strong. It's kind of the anti-index. You can really use it as part of your portfolio and also make it really tailored to your needs and track things like ESG, other things that might be important to you. Those tools don't exist today, and they need to, the base layer foundation of digital securities needs to be brought on first before those tools can start to be developed and deployed.